Okay, hello and welcome to episode 10 of the Technical Bootcamp. Today we are talking about fractal market nature. So, I get asked a lot about timeframes and which timeframes I should be trading, and today's class is going to clear that up for you and give you a new fresh perspective on the whole timeframe question. We're going to talk about how every market is the same regardless of the timeframes you trade, why you don't need to be a day or swing trader and you can pretty much just do what you want, and how you can apply the theories that we are teaching in this bootcamp to absolutely any timescale. So we're going to start with a question that I get asked a lot over in the comments, which is, what time frame does this work on? The fact of the matter is that every price action concept you've learned and will learn inside of the bootcamp is applicable to absolutely every time frame. There isn't one correct time frame to trade, and realistically you can kind of just do whatever you want to do. See, everything I've been teaching you up to this point about the market has really been pushing you to understand that when we read charts, we are reading buying and selling psychology. We are reading transactions. We are reading buyer control, seller control. We are not just looking at candles and patterns, okay? And charts, because they're a representation of buying and selling psychology and control, this means that, well, if we think about the logic, transacting is taking place on broad horizons across very large spans of time. We have institutional participants taking large trades and taking large transactions with each other that will last for the span of a year. For example, people selling off dollars to a different institution. This can happen for a very long time and can weigh the dollar down for a long time. But we also see the same buying and selling psychology and control on small timescales. For example, we may see the dollar being sold off on a very short-term perspective over the matter of a few minutes, which means the same patterns and the same price formations, therefore the same setups and opportunities, will become visible across every time frame that you look at. So every chart is the same. The 1 minute, the 30 minute, the daily, the monthly, there's really no difference in the way that you trade them. And I'm going to show you in this video how true that is, that you really can just trade whatever kind of time frames you want to trade. Another question I get is, what time frames do I trade? Okay, do I swing trade? Do I day trade? What do I actually do with the concepts and theories that I'm teaching you? Well, the simple answer is I just trade all of them. Okay, this is weird. I know people are told to follow very rigid top-down analysis systems, and I have no problem with that. If you, to begin with, want to focus on a set list of time frames, this is absolutely fine, and we'll talk about that more at the end of the class. But the way that I am now, with the amount of experience and understanding of the markets that I have, there really is no need to confine myself to one time frame or one set of time frames when I understand the reasoning behind the actions that price makes. If I see clear buyer control on the 5-minute time frame and it creates a setup for me, how is that any different to seeing the exact same level of control and a setup on the 4-hour? And why would I not take the 5-minute one just because I created a rule that said, even if this time frame creates a perfect setup, you're not allowed to take it, okay? So I trade a lot of time frames. Now, I don't trade all of them in the sense. I said that to help you get across the point that you can just trade whatever you want. I do believe it's good to have some level of kind of a rigid rule in place of the kind of time frames you would generally look at. But what I don't want you to do is say, well, my flow is daily 4-hour, 1 hour, and I'm not allowed to take a trade off of the 1 hour, the 4-hour. I have to take it off of the 30-minute, which is my entry time frame, okay? So people put these rules in place, but realistically, if you have a rigid flow of, say, daily down to the 30-minute, but then you go to the 15-minute and you see a counter opportunity that works perfectly and fits everything we've discussed so far, I have no problem with you taking that. And if you also see a perfect entry opportunity off the 1 hour, then you don't have to go to the 30-minute to actually make that trade happen. You can take the trade wherever you want. What we're trying to do in the market is read the buying control, the selling control, and that battle between buyers and sellers, and we use that information to actually capitalize. And it doesn't matter what time frames we capitalize on. So we're going to start by just looking at some charts, because a lot of people think charts are different. Okay, I want to show you that that is absolutely not true. So we got two charts here, and I want you to tell me which time frame each of these charts is on. Now, obviously, it is pretty difficult to do that because you've got no additional context, and this is the point. If you don't have a little number telling you exactly what time frame you're on, it's really hard to decide which time frame you're actually on because all charts look the same. Now, I'll give you a little hint. One of these is the 1 minute. Now, I'll give you a little hint. One of these is the 1 minute time frame, and one of these is the 1 day time frame. Does that make the job any easier? Well, if you think you've guessed it, it's the 1 minute on the left, and it's the daily on the right. Except it's not. It's the 15-minute on the left and the hourly on the right. So even if you thought you'd guessed it right, even if you thought, oh, I know now I've got an opportunity, it's not true, because all of these charts are completely the same. They all look the same. They all do the same stuff. They all give the same opportunities. They all move in the same ways. There is no difference between trading a monthly chart and a 1-minute chart when you're trading these price action concepts, because that buyer seller psychology, that battle, it's all taking place on every time frame, on big, broad horizons and small timescales too. Okay, so hopefully this is starting to get the point across that all charts are the same, but of course you do need to see some opportunities being taken and opportunities forming across different timeframes in order to understand that. So in this class, I'm going to show you 3 setups. We're going to do it in all the same format, all the same opportunities, all the same layout, the analysis, but it's all going to be on different timeframes. So you can see just how applicable this is. And then when we get to the end, I'll give you some tips so that you don't turn this into a horrible, confusing mess. Let's go. Okay, so for simplicity's sake, as I'm really just getting across to you the point that all timeframes can operate in the same way, we're not going to go super deep into context of like multi-time frame analysis and big picture views. I'm just going to show you isolated entry target opportunities so that you can see how pretty much the same thing is going to operate everywhere, okay? So Euro GBP to start with, we're looking at the 1 hour time frame. So this is the hourly. And what we've got is basically an uptrending piece of price action. Okay, we have higher low, higher high, and then the market's come down here and closed beneath the higher low. So by pushing through this level, we've created a lower low, which gives us opportunity to potentially sell into this market. All right, that's generally what we would do here. Now, given that we've started to break structure, we basically have this area of efficiency, and then we have down in the low here a demand zone. We could basically look at targeting this demand for a short position, right? We could also look at taking this swing low as our main target. And then what we would do for entries is identify imbalanced areas. So we have one imbalance here and we have another imbalance here. Now, as we've said, we do like to see inefficiencies filled, and the extreme is going to be the most simplistic area to sell from. So this would be where we would place a sell limit order. We would place an order there, stop loss above the high, and then our target would be into the low. And that's basically the setup, right? Because what we're seeing is the shift in structure from highs into lows. So we're seeing this uptrend breaking into a downtrend, and then looking at the supply zone to sell from to bring the market down, right? That's what we've got here. So to visualize it, there it is. We have the high and then the higher high up to there, and then the lower low down to there, and then the pullback into there, and the sell into a new downtrend, targeting first of all liquidity, second of all demand zone if we wanted to, okay? So that would be the setup. Now, we could also look at confirmation setup. So if the market came into here and provided confirmation, we could look at that. We'd pretty much just look at this last candle before the impulse, right? But I'd clear stops over the high if we were to take that. But if we don't get a confirmed shift there, if we don't get this, then we just opt for the sell limit at this level, okay? So that would be how we would set up a structure-based trade using the imbalance, supply and demand, all of that stuff that we've discussed in the bootcamp so far. Now you see the market runs up, taps into there, and then runs down and hits those downside targets leading towards the demand zone. And obviously we simplified the target for this one at the swing low, but regardless of which one you went for, that would be the trade. So that is basically what a normal setup is going to look like. Now we do incorporate other elements in the majority of cases. As we've said, we are looking at context over patterns. So what we've done here is identify a point where we've seen the buyer control slow down and then shift into seller control. We've used all of those concepts covered so far in the program or in the bootcamp to get here. But we're not going to take isolated setups like this a lot of the time without the bigger picture context that we like to build. But as an isolated setup, this is definitely a very nice one and does give you some input into kind of how we would approach the market there, okay? So with that said, let's move along to another time frame and take a look at the same opportunity printed again. Okay, now take a look at this. This is the 1 minute time frame, but we see basically the exact same thing, right? We have our impulsive move. We have a demand zone down here, which we could use as our final downside target. There's the swing low just here, which also is equal low liquidity. That's going to be a really nice draw for a target there. And then up here, we have this uptrending structure, which has shifted around this point into a low, and we would be looking to sell from there, okay? So if we mark out the supply zone, this is the only supply zone, kind of simplifies the process. We would look at a trade like this. We would sell here. We put our stops above the target or above the zone, and we would run our targets down into that low, Okay, so the same exact setup of basically uptrending structure shifting bearish, a target at some liquidity at the low leading towards demand, and then potential extended target if you wanted to, but we're going to keep it simplified just there. And then if we run this market forward, you see we get a pullback to fill the imbalance. We hit supply, that triggers in the trade, and then we get a run down towards those targets, right? So that's what your trade would look like there. This is exactly the same format and exactly the same setup. We saw everything running completely in unison to what we saw on that 1 hour time frame, except this time we were on the 1 minute. So you can see that literally 60 times smaller time frame, and we get the exact same setup still. This is a repeated process, right? When we understand what the market is telling us, we can take the same trades across every time frame. And now this is the daily time frame. So this is way, way bigger than the 1 minute we just looked at. But if we look at the formation, we've got our low, again, very similar. So we'll run the target to there. We have uptrending structure, and then we have a break from an uptrend into a downtrend coming in at this point here, okay? So what we would do is identify supply. Well, the supply zone at the very high, this blue one, has actually been retested. So our supply zone to focus on is actually going to be this larger indecision candle where the market kind of stalled before selling off. So our trade would look like this. We would sell there. We would put our stop over the high, and we would target down into the low. And then if we just allow this market to run forward, we want to see it fill this imbalance, tap into supply, and then get the trade lower, okay? So there we get the push into supply. Our entry would be triggered around there, and then we get that market running down to that target for a trade like this. Now this one, obviously being the daily, would take a very long time to play out. This ran from March through to June, so it is a big trade, but it shows you the concept works everywhere, all right? So regardless of whether you want to draw these concepts over to the minute, the hourly, the daily, the market setups will be the same, because all we're seeing is buying, selling psychology taking place across various different scales of time. Small scales of time for 1 minute, 5 minute, 15 minute trades, and then medium scales of time for 30 minute, hourly, 4 hour trades. And then we can see it even on the broadest of horizons over on the daily and weekly timeframes where the same formations occur. So, point of the matter is, you can trade any time frame you want, okay? Now, that doesn't mean you should go to the charts and just click on every single different time frame and start taking random positions. Now, I don't trade time frames in isolation, okay? So to give you an overall idea of what I actually do, I flow down from the weekly time frame and build narratives. So I'm reading that buying, selling battle, putting things together to work out what I believe the market is likely to do next. Then, when the narrative is built, I'm open to trade any time frames that fit within the context of that clear buying and selling battle. So if I have a clear area I think the market's going to move to on the downside that I've identified on the 4 hour, for example, then I will look for the opportunities around those time frames to do that. But if there is still room to fill into a supply before that sell takes place on the 15 minute, for example, then I won't close myself off to the opportunity to take the trade towards that zone if I believe the context is telling me that the market is likely to get there. And then if the market provides a setup, I'm open to take that, okay? You can do exactly the same. You don't have to build a rigid, I will only take trades on this time frame, but you should also not completely be unrigid and just take trades everywhere with no context. Once you've built narrative and context, you can trade inside of that context on any time frame that you desire, because as we've seen today, all of those time frames and all of those charts are going to look the same. So the big takeaway from today's class is that context and understanding of the buying and selling battle matters a lot more than the time frame that you actually trade those opportunities on. If you learn to read what's actually happening behind the candles, you will never need to confine yourself to time frames again. Now you can use this information to essentially decide in your system what time frames you're going to approach the market with, and really just stop worrying about it so much, okay? You don't have to ask me whether this is going to work on the daily, whether this is going to work on the hourly, whether this is going to work on the 1 minute. It's going to work wherever you apply it, providing you read the markets, understand what's happening, build context, build narratives, and then trade sensibly within that. Now, this is the first time I'm going to mention this, probably one of the only times I'll mention it here as well. But if you want to shortcut my full system, I've put a link in the description. I teach traders the entire process that I use. Basically, the bootcamp is teaching you concept, and the program teaches you the system of where I actually put everything together step by step, piece by piece, and turn this into trading opportunities, and then how I manage those trades and basically everything you would need to know. So if you are interested in that, just hit the link in the description. You can see about it. If not, that's completely fine as well. Keep enjoying the bootcamp, and I will see you in the next episode.